So we are getting close to Christmas season. How many people have already watched at least one of the Charlie Brown specials? Oh, come on, where's the Christmas spirit, right? Right? So when you watch the Charlie Brown specials, the kids always talk to each other, and then when the adults speak, right? When the adults speak in the movies, you never hear the adult say anything. You just hear wah 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 wah. Okay, and that's what we're going to talk about today, because that's, for most people, that's what happens with the accountant. When you are visiting with the accountant, when you're talking with the accountant by phone, whatever, and even to the point of, say, emails with the accountant, this is what's going on. You say something, you ask something, and the accountant remarks are kind of like wah 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 wah, that type of thing. So it's like this. Here we are with the accountant, and this is what the accountant's saying. You hear all this stuff. Wah, 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 and your head just spins because you have no idea what the crap any of this stuff means. Isn't this what we'd like to ask? Just little simple things. It's kind of like, could you get out of tech speak? Could you get out of your world and get into my world? And, to some degree, we do it also to people. We get into our tech speak and someone else doesn't understand it. This is like telling you, here's how much I know. And I always learned, no one cares how much you know until they know how much you care. No one cares how much you know until they know how much you care. I don't care how much you know as an accountant. I want to know that you care about me because I own this business and I want to do things to help make my business better. And that's what we're going to talk about. As I told some people in the back, here's the most common comment I get out of this session. I'm going to go home and fire my accountant. And here's my point to it. I want you each to think about the accountant you have. I want you to think about how long you have had that accountant. I don't care if they're a relative. I don't care how well you like them. I just want you to think about this relationship and how much, I love my accountant. Okay, well, here's kind of like how you measure it. You say, hey, my accountant does a great job. When I go, how do you know that? Well, here's the thing. I've never been audited. Okay, I pay my taxes on time and they leave me alone. Okay, so that's kind of like flying on airplanes, which I do too much of. And someone says, so did you have a good flight? And I said, here's my measurement. A good flight is one in which I can walk away from it. A great flight is one where they can reuse the airplane. That's kind of like what we do with the accountant. Hey, I don't get audited. Boy, I got a great accountant. I'm going to prove you different this morning. And in this time that we're together, with what I share with you, if you hear something, you go, I never knew that. And I expect you to have several of these. Oh, I never knew this. Then I'm going to say, I'm just a fourth generation of my family to have owned our business. I grew up in Arkansas. And if my friend who was here a while ago, Andy Collins from Austin, because he likes to pick on Arkansas people, I'm going to say, how is this Yahoo, me from Arkansas, in less than 60 minutes, able to teach you something about accounting that your accountant has never taught you? If we could have another hour, a third, a fourth, a fifth hour, if I could have a whole bunch more time, there'd be a lot more I'd want to share. And I'm going to say, how much more would we look at? And I want you to think about it from the perspective of, well then, why hasn't your accountant been talking to you about this stuff? And you go, well, I understood what Shay said. I go, well, why haven't you understood what the accountant said? Why are they kind of up over here somewhere? Why aren't they working with us? All right, so I gave each of you a postcard. Let's explain the postcard right quick. We'll get going. I'm all about results. That's all I want to see is results. I want to see people go home, do something. I want to see you back here at PRI next year, or maybe it's if you come out to SEMA in November. And I want you to run into me somewhere and say, you know what, I went home, I made a difference. I changed something in my business, and this made sense, and I make more money now. Okay, then we're both happy. But what I know is that adults are bad students. This is not your thing to come sit and listen in a seminar type setting. Research tells us that with the average adult, if you don't do something what you hear within 72 hours of having heard it, odds are you will do nothing at all with it. From Friday to Saturday to Sunday. So you got to breakfast Monday to do something with what I'm sharing, or the odds really go against you doing anything with the information. But you're here, you're enjoying this, and you got to go home. So I give you the postcard. Let me explain to you how it works. If you've been in my sessions before, you already know this story. And that is, I invite you to take the postcard, flip it over to the back side, address it to yourself. Okay, I have nothing to sell, no products, no services. I'm not calling you for anything. I want to see you do something. You address the postcard on the back side, you flip it over, and down inside the dotted line, it says, when I get back to my business, this is what I want to do. You write down, what are you going to do? Maybe you'll have the one that's going to beat the really cool one I got earlier this year where the person said, I'm going home and I'm going to kill my accountant. And then in the bottom said, don't worry, I know where to hide the body. Okay? Is there an accountant in here by any chance that I'm picking on somebody? Okay, my little brother's a CPA, okay? And generally I will get an accountant who says, no, you really went too easy on us. Okay, so you write down what you're going to do. At the end of the class, you let me have the postcard back. I'm going to hold on to the postcard for 14 days. Somewhere during the next 14 days, I'm going to read your postcard. That's making the assumption I can read your handwriting. I'm going to pull out my pen. Mine writes with green ink, green color of money. Money is what we're here to talk about. And I will try to be legible and add a note to it. I will cut the postcard out. I'm going to buy a stamp. I'm going to mail the postcard back to you. What I have found most frequently is that this restarts the thought process. And you can hang the postcard on your desk or put it someplace around where it looks at it. And I hope you look at it. I hope you stare at this thing until you decide, I need to do this. I need to understand this. I need to change something about what I'm doing because this could make a big difference in what goes on inside my business. Okay, hold on. Give me 2 seconds. I'll come right back. I can only look pretty for so long. And today is not my day. And tomorrow's not looking good either. Okay, so that's how the postcard works. I got points. I want to talk to you about the accountant. This is what scares me. This was a note on one of the postcards at one point. Does that scare you? Does me. The person said, they don't understand this stuff. Okay? Now, an accountant's in a better place because this is their thing. But particularly if you use like a bank person as an advisor to listen to them, there's a lot of them who don't do it. I have manufacturers that when they work with dealers will call me and say, would you look at their financials because we can't understand what's going on. And to me, the financials is like a doctor taking your pulse and your blood pressure. It's the baseline of telling me, do I have something alive here going on? All right, so number one, you're probably not carrying your share of the load of the conversation with the accountant. You're probably dependent upon that accountant. There's a good chance you're the person who takes documents, check stubs, and all kinds of other things, bank statements, dump them in a box, and take them to the accountant somewhere early in February and say, here, deal with it. Okay, that's wrong. That's very wrong. Now, are there accountants who like to do that? Absolutely. About 15 years ago, the accountant I used, I'm not so sure if I quit or he fired me, but we went our separate ways. And at one point he ran into my wife and he says, it just didn't work with your husband. It's like he wants to participate in a conversation. And it's like, no, the deal is you put papers in a box and hand it to me and you walk off. That's the way it's supposed to go. And I go, no, this is not the way it works. Because there's a lot I know. I just don't realize what I know that's helpful to you. But your accountant probably knows you're not carrying the end of the conversation. Now, this is not putting blame on the accountant. This is simply explaining the situation. They know you don't know the stuff about financials. And from their side, we look at it and we say, if I'm the accountant, why should I care about your business if you won't care about your business? If you won't put forth the effort, it's like a doctor telling you you need to exercise and lose weight, and you come back a year later and your health is failing even more, and you're still doing all the wrong things. What is the doctor to do if you won't put forth the effort? Same is true for the accountant. If you won't learn and understand how it works. So I will invite you in one place to learn and read about it is go up to my website. It's on the postcard. It's on the slide there, profitsplus.org. I've got probably 400 articles that I've written over the last 30 years, and an awful lot of them deal with stuff that's got numbers in it. Just understanding any kind of component about financials. I mean, from the essence of it's a piece of paper. And I have 45 calculators up there. Some you download, some you have to use them on the site as they are, that will do every kind of analysis. For example, that first slide I put up there with the two people talking to each other, all of the ratios that are there, I've got them in a calculator on my website, but the difference in mine, it says, this is what this ratio is, this is the numbers that go into it, this is how this number goes here, 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 whatever. Is that my muffin?
Yeah, you want it?
No.
I can go get another one.
No, but sausage looked good too.
You can have one. I brought food.
And see, now I got sidetracked. But so on these calculators, it tells you all the information about it, and then it tells you here's why you want to know this, and which way you want the numbers to go. So you can kind of sit down at your own computer and go through these things and begin to get a good understanding. And the more you understand how the numbers go together, the more you can make money. It's not about learning more about products. It's not more learning of a program from some wholesaler. The more you learn that stuff, the better you're going to make someone a great employee. But if you want to take and own a business, you got to act and think like an owner. And you got to do the things first in the morning that an owner does. And then if you want to go out and, as I would call it in my place, play, like talk to customers and have fun, okay, you can do that, but you got to do the owner stuff first. That is if you want to be an owner. But if you're happy working for somebody, instead, then just stick with the products. Stick with the technology. So the P&L, profit and loss statement, income statement, says, hey, you're making money. So where's the money? Okay? Where is the money? We all learn this lesson. Some of us learn it when we should. Some of us learn it at a bad time. And that is profit, like on an income statement, profit and loss statement, and cash on hand, like what the checkbook says is there. Those two numbers have no relationship to each other at all. Totally disconnected. Profit and cash on hand are not related numbers. Okay, so what's going on? What happens? Where's the money? Well, here's where it goes. When I grow a business, when I'm growing a business, growth is like a monster, and the monster eats one thing. It eats cash. And it eats cash first before the growth comes. Now, you may think that doesn't make sense. If I can take and order something from somebody, and if I can get 30 days dating on it, I can get it in here and I can sell it, and then I can pay for it before, or I get the way I can pay for it and then order some more. I can keep this cycle going, and it's like, it doesn't work that way because you got too many other operating expenses that come in. You can't outrun growth. It has to be planned, and to the extent a number has to be planned about it. A friend of mine has a parts place. He's outside of Toronto, and he went to buy a competitor. And he says, look, that competitor is so bad that there's a half dozen installers relatively close to his place, and none of the half dozen will do business with him. He's that bad. No one likes him. And I'm going to buy his place. And I said, got to watch out. You're going to grow this business. You got to plan how much can you afford to grow, and when can you afford to grow it. So I see him about a year later. I said, hey, how's it going? He says, the new place is up 43%. Things are going great. I mean, he's got the proud daddy puff in the chest going at it. And I kept saying, you got no money in the checking account. You are dirt poor. You can't pay your bills. And finally, at one point, I go, you can't pay your bills. He's like, what? And I says, you got no money. You can't pay your bills. I said, how did you know that? I said, told you last year. Growth has to be planned, and you have to know how much can I afford. And we'll talk about what it is you got to learn to do it. So, higher inventory, more equipment. Okay, you got more inventory, it's got to go on shelves. Who pays for the shelves? You got customers, and you're sending them bills, all right? And they're not all paying it in 5 minutes. Well, when you are having receivables with customers, you are in effect a bank. You're an interest-free bank, of which your vendors are not interest-free to you. You got to know, can I afford receivables? You may take, and if things go rolling along, that as the start of the season, you've made a bunch of sales and you've got some money, and people go, wow, I've got some money, I'm going to take and pay off these bills early. There's something about small business owners that some of us have this point of pride that I don't want to borrow money from anybody, and I don't want to owe anybody anything. Okay, now that's two of the worst ideas you could possibly have. You make money when you borrow money, okay? Now, this is contrary. Anyone here ever listen to Dave Ramsey or take a Dave Ramsey course? Okay, Dave Ramsey talks about personal finances. He does not talk about businesses. Totally unrelated. When you go to a bank and you can borrow money at 8%, and you can get a return on investment of 25% in your business, why would you not borrow money at 8% to get a 25% return on investment? In a personal situation, if you borrow the money at 8%, you're just paying off a bill. Okay? You can't turn around and invest that in something like the stock market or mutual funds or anything and guarantee you're going to get more than 8%. You're kind of just rolling the dice. But in a business, it's different. The sales go up. All these type of things come in, and they are the factors of growth that cost us money. Number 3, the expenses on your P&L can be put in any manner that you want them to be put so that you can make sense out of them. Such that most people have a financial statement that's put together in a format that makes most sense to the accountant. I don't care about the accountant. I care about me and my business. So here's my sample. Now, hard to read on the screen, so here's what I've got. When you go up to my website, across the top there's a green bar. Second word from the right is calculators. It's a pull down, and they're in alphabetical order. And this one is called Logical Profit and Loss Statement. Let me explain it to you right quick. Look at the yellow items. Here's this month, and here's year to date. Here's same month last year. So if we're looking at November, what is November this year? What was November last year? I mean, logical question you want to say, how did I do last November compared to this November? Why is it they're on two different pieces of paper in two different file folders? Why don't we have the accountant just put them on the same piece of paper? Year to date last year. Hey, if I'm looking at the first 11 months of the year, how am I doing this year? How did I do last year? What was my plan? We're going to talk about creating a plan, a budget, and then how far am I off the budget, plus or minus? This financial statement's now probably 2 pieces of paper wide, but I got everything I could possibly want to have right there. My accountant doesn't do it that way, and I go, who's in charge here? You or the accountant? As long as we go by what's legal, shouldn't it be in a manner that I can understand it? Let's look at the expenses. Here's everything that deals with advertising. Here's everything that deals with occupancy of the building. Here's everything that deals with payroll, and here's what's left over. Doesn't make sense to me. Why are insurances all grouped together as this is what insurance cost? See, they're all how much does insurance cost me on the building? Because when I'm done, this is the total of what does it cost me out of every dollar I take in to be in this building. How much is this building costing me? And if I'm looking at your financials and you're looking at your financial, if you come back and say, hey, this is like 10.2%, I'm going to, you know what? You're in too expensive a building. Something's wrong here. This is costing you way too much money. You got to get sales up or we need to be someplace else. Or in payroll. That's not only just payroll, but it's payroll taxes and workers' compensation and insurance and everything else that deals with all the incentives, all the bonuses. Bottom line, payroll subtotal. What does it cost for all the people, including me, the owner, here? What does that cost? I'm going to have the same comment. If I look at this and you tell me that this is like 20% of every sales dollar is paying payroll, I go, friend, I can tell you real quick why you ain't making money. Somebody's getting paid too much, or there's too many somebodies. Something's wrong in this business. But when you put it in a format like this, I can understand this. I know where it's going. So I would invite you to take your financial statement, go up to our website, punch in your numbers, have it rearrange it to this, and go, can I understand more about my business now? And if you can, then print this sample out, take it to the accountant and go, I want it this way. And if the accountant says, that's not the way I do it, then it's a simple, hey, who's paying the bills here, you or me? I'm writing the check. This is not about me understanding you. This is about me understanding my business. And I can understand this a whole lot better. So let's cruise on some more. Number 4, how about the income side? I can change that. Cost of goods sold is usually the second line because I'm selling stuff. Cost of doing business is the side if I'm service. Because in cost of doing business, I don't only have a product, but I've got manpower that goes into it. And I've got all the costs related to the manpower, like the insurances and payroll taxes. And I put them together. If I do service, why not take and break I sell parts away from I do service? And let's figure out, am I really making money on the services that I do? I can ask for that, and the accountant can give that as long as I can document it and I can track it in my business. Now, you've got to be able to put out the right kind of information, and you can get it in this kind of a format to say, I understand more of what's going on inside my business. Number 5, the margin. I sell it, I got a cost of goods sold for an item, and then I've got a gross profit, and I've got a thing called gross margin. Margin. It's supposed to be kind of consistent from month to month, and yet I see businesses all the time where the margin is like here, and then it's here, and it's just over, and I go, something's wrong here. And I personally get very aggravated. I says, your accountant ought to know this right off the bat. But what's happening is the accountant, to save you money, is pushing the work down to the lowest person on the totem pole who can handle it, and then it's supposed to come back up to the accountant for their review. And somebody's not taking the time to review it. Your margin should not be all over the park. Why does it happen that way? Number 1, checks get miscoded. Inventory is not an expense. Inventory is not an expense. It's an investment. You take cash, an asset, and you trade it in for inventory, which is another asset. And you want inventory because I can make money off of inventory. I cannot make money off of cash. Cash just sits there. Inventory comes in at this dollar and it goes out at this dollar, and that's the profit I get to take home after I pay some expenses. That's the concept of how it works. Inventory is not an expense. The cost of goods sold is based upon what you receive, not what you pay for. Okay? That's the important one. Your reporting should be done upon, I have received this inventory, not upon I have paid for this inventory. Because the word COGS is cost of the goods sold, not ordered, not paid for, the cost of the goods that I have sold. And if your margin is bumping around all over where something's not being recorded right, and another one on the same note, anyone ever get this one out of your accountant? There's an error caught, and they say, we'll make an adjustment next month. Anybody get that? Okay, that's the first thing. No. I do not accept adjustments. You go back and redo it. Never, ever will you accept an adjustment. I want it done right. Each one of them, I want it right. Go back, redo it, because if you make an adjustment next month that says this month is wrong, now next month is wrong, and you're expecting me 12 months from now to remember what the mistakes were, and it's still wrong. Loan payments. When you pay for something, if you have a $500 payment, it is the interest that is an expense, not the $500. The $500 is principal plus interest. So you get a statement from the bank that says, hey, on your loan, I need $500. You go look on your financial statement, and if it says expense is $500, okay, your financials are wrong. And that's another one I get. An accountant says, oh, I make an adjustment at the end. And I go, no. So to one person I said, okay, here's the way we're going to solve it. I said, how much you pay your accountant every month? They said $200. I said, all right, here's what I want you to do. Next month, when you get the bill for the $200, I want you to send the accountant a check for $20. Someone's going to call you. And they're going to say, hey, I got your check in the mail today for $20 here. The check is wrong. It's supposed to be $200. You go, what? And say, the check is wrong. You say, oh, you mean like my financial statement's wrong? Tell you what, when you get the financial statement correct, I'll get the check correct. Let's just see what happens. Okay, so I get this. Okay, you are a really hard person to get along with. No, I just know quality when I see it, and I expect the relationship to work that way. I'm putting forth my best effort. I expect you to put forth your best effort. And it's the best effort all the time. It's like, hey, buddy, sorry about that part I sold you, but on the next part, I'll get it right. Is that going to fly with any of your customers? Then why should it fly with what you get from somebody? Number 6. So we come to December 31st, year's over, stuff happens. You start piling up the stuff in February. You take all the papers to the accountant, and the accountant says, okay, I've got your tax return ready. Maybe it's not February, maybe it's March. I say, let's talk about it. And I go, no, this makes no sense. Why would you sit down in February or March and have a conversation with the accountant and discuss this year's taxes? There is nothing you can do to change any of it. Nothing. The only thing a person can do after December 31st that affects your taxes is dealing with you personally and money that you put into a qualifying retirement account. And the money has to be in before you send the tax check in or send your return in. That's the only thing that can possibly change. On your business, it's over, it's done. Why should I pay for an hour or two of an accountant's time to sit down and discuss what happened when I can't do anything about it? What if we change the meeting to May and say, Mr. Accountant, when you have the financials done for April, now we're going to sit down. And we're going to look at April to date this year, and we're going to look at April to date last year, and know that the year is 1/3 over, and saying 1/3 of the game is over with here. What can I do in the next 8 months to make what I'm doing even better? Or if I've got a problem, I've got 8 months to solve it. That makes sense. I'm looking for you as an accountant for your advice as to what to do, but I do not need a historian in February telling me what happened. If I want history, I'll read a book. You can't do anything. Nothing can be changed. Number 7, when you borrow money for your business, we've discussed that issue, it's important how on your balance sheet, assets and liabilities are arranged and where they go. Your financial statement, people say, well, it's 2 halves. Assets equal liabilities. Yeah, kinda. In the sense that one of the liabilities is you. How much equity do you have in the business? If all your assets equal your liabilities and there's no equity, your business is worth nothing. 0. But one of the liabilities is how much money does this business own to you? Because you started the business and you put money into it. Okay, well, you should expect that money to come back. Just like someone else had loaned money to the business, you've loaned it. You should have an expectation that you get to have that money at some point in time. I mean, that's called, I'm going to retire, and you've got this building that you've done. But you have these words called, in the asset section, current and the word long-term or fixed. And liabilities are either current liabilities or they're long-term liabilities. You want to know, are they categorized correctly? The definition is, if this asset, something, stuff, positive thing, is going to become cash in the next 365 days, it's a current asset. If it's not going to become cash in the next year, it's a long-term or it's a fixed asset. So you got a point of sale system, you got fixtures, you got equipment, you got a building, okay, you got a delivery vehicle. All right, those are fixed assets. They're not going to become cash in the next year. Everything else is a current asset. Liabilities, the bills that you expect to pay in the next 12 months are current. Any bill comes after that is long-term. So when we are buying a vehicle, we're paying, say, $500 a month. The part of the vehicle that we're going to pay for, not principal and interest, not that $500 a month payment, but the principal payment, that dollar amount for the next 12 is a current liability. And on payment 13 out to whatever the end is, that payment, principal part, not principal and interest, that principal part, that is a long-term. Okay, so that's kind of complicated. What the crap is all that stuff for? One of the things when someone loans you money is they take your balance sheet and they're going to run it through a financial ratios, the same one that's up on my website, Financial Ratios Calculator. And they're going to look at things like current ratio. So current ratio, current assets, current liabilities, okay? Assets here, liabilities here. If your current assets are here and your current liabilities are down here, how's business look for the next year? Okay, but as these start getting like this, how's it looking over the next year? If it goes like this, you got problems. Why isn't your accountant teaching you what the current ratio is? This is not something that turns on like a light bulb, it's a problem. Don't you want to know what your current, now that you know how it's calculated and what it means, doesn't everybody kind of want to know what your current ratio is every single month of the year? Not just a P&L they hand you? Don't you want to know, like, hey, how's it looking? And, ooh, last year at this time it was here, and this year at this point, what's going on here? Because we want it to go back this way, not keep coming this way. I don't want someone to go, hey, guess what, we got a problem. Well, we've seen it for the last month, the last 6 months, the last 12 months, we're just now telling you about it. That doesn't make sense. I want to know about it. Same thing with one called debt to equity. It's how much debt do you have? How much equity you have. The idea is someone's going to loan you money. They want to know that you've got a chunk of equity in this business, and if things go south, you're not going to leave because you want to be able to get your money out of it. The important point is when you go to borrow money, that's stuff they go looking at. And the lender, in looking at this stuff, is going to determine, am I going to loan you money at all? What interest rate am I going to give you? What terms am I going to give you? You know, are you like one of my best customers because you've got like a really strong financial statement and your ratios are looking out? I want to understand that so that when I walk in to see a banker, I want to be able to tell the banker, this is what I want to do, and this is how much money I want to borrow, and this is the interest rate I'm willing to pay you. Not going in begging like, oh, can I borrow money? It's like, this is how I want to structure the deal. And you're going to kind of blow them away because they're not used to having someone who walks in here as a business owner who's got strong financial skills and knows exactly what they want and what they should be getting. So when you go to borrow it, do you borrow money from the bank? Do you borrow from yourself? On your financial statement, let's say you owe money to a bank and you want some more money in it because you got an opportunity to grow. Money borrowed from you and money borrowed from a bank is the same thing. Okay, on the ratios, it's the same thing, no matter where it's borrowed. But if you take, say you need 100 grand, and you have the 100 grand and you dump it into the business, and it's called contributed capital. Your equity increases, but you are basically putting yourself personally in line to get the money last before them. That just makes your business look all the stronger. Now you're entitled, you can pick up better interest rates. Depending upon the ownership format and the outstanding loans, these do make a difference. Is your accountant talking to you about this stuff? Or are they just saying, you know, you need more money in your business? And they kind of leave you to go at that point. Well, go see the banker and see what you can get. Seems like we're not playing on the same team here. This is, whatever word we use, depending upon the legal entity of the business, how much of the business do you control? Is your piece of the pie growing? I don't mind a business that borrows money. I just want to know, compared to where you were 5 years ago, then when I look at equity, I want to know that your equity is growing. If your equity is growing, this is like what some people call it their retirement account. And it's also, hey, when I sell this, I'm expecting that much more money who's coming out here, and it's coming to me. Different day, we'll talk about how to get it out and not pay taxes as much on it as we possibly could. That's another job of the accountant. But I just want to know over a period of time, is your equity in the business growing? Whatever terminology it's used to call it. I said I'd talk to you about a budget. With a budget, every business should have it. All right, so like, what's today, 7th? We go, in our 4 weeks, what's every TV, radio, newspaper going to have articles about? New Year's resolutions, okay? What's your New Year's resolution? All right, so let's pretend I got 2 people, and they both make a New Year's resolution to lose 25 pounds. One person says, that's my goal, and they get to Thanksgiving, and they hop on the scale and realize they have lost 10 pounds. But the goal is to lose 25. So they have Thanksgiving and Christmas, that time period, the best eating time period of the year, to lose 15 pounds. What do you think the chances are that person's going to lose 15 pounds between Thanksgiving and Christmas? Okay, well, as we say in Arkansas, you have 2 chances, slim and none. Slim just left town. But what about the other person who made a point to get on the scale on January 31st and realized they had gained 3 or 4 pounds? That person has spent 1/12 of the year, a little over 8%, and realized how they eat in January is not going to get rid of 25 pounds. Matter of fact, it's going the opposite direction. And then they come back in February and go, have I made changes? Which of the 2 people's got a chance of actually getting off the 25 pounds? The guy who waited to November to weigh, or the person who weighed themselves in January? Okay, that's a budget. That's the same thing for a business. At the end of January, what should my financials look like? At the end of February, what should my financials look like? All you're doing is writing a profit and loss statement, futuristic. This is the task. I mean, this is how simple it is. You take a table, you print out your last 12 P&Ls, and you take a pencil with an eraser, and you look at each one of them, and you go, this is what happened, scratch out each of the numbers, and say, this is now what I think is going to happen. But you think of it as an individual month. Do not do it with I think I'm going to grow my sales 10% next year, so each month I'm going to go 10% sales increase for each of the 12. What would be the chances if you were going to have a 10% increase in sales next year that each and every one of the next 12 months you had a 10%? Okay, if you can do that, go to Vegas, okay? You got a much better chance. You look and say, well, but I think January with this kind of sales increase, but February will only have this, and March will have this, and April will have that. That's the way you got to look at it. And the same thing for expenses. You can't look at expenses and say, I think all the expenses are going up 3% next year, and just take everything that happened and just add 3% to it. This is a stop, sit down, look at it, and think about it. And put your numbers together. Will it pay off? Well, how many people remember Bernie Madoff? Right? Remember Bernie Madoff, his situation? Anybody read the story of how Bernie Madoff got caught? You know, it was a Ponzi scheme, and he was pulling money in from investors, showing what great returns he got, and then taking that money and paying it to the previous people and getting more, and it just kept getting bigger and bigger. Some smart person sat down and took Madoff's history and plugged it into an Excel chart and discovered that everything was a multiplier factor. It was this number multiplied times something, times something, times something. You go, you can't hit that many months in a row where it's the same percentage of increase. And this person took it to the feds and go, look what's here. This is what's going on. I think we got someone who's faking it. And the feds investigated, and Bernie is now a resident of some state somewhere. That's why you don't, not because you're going to become Bernie Madoff, but that's why in your business, you sit down and look at each one individually and going, what's going to be different? And then, so let's do the December one as an example. December's over with, early January, you write the budget for next December. and you watch your sales for January, February, and March, and you go, what has happened in 3 months that makes me think differently about what happened in December? Let's take a moment, let's take the eraser. Is there any numbers over here I want to change on the December and make adaptations to it? Now let's go April, May, June. I'm 6 months past that December, I'm 6 months to December. Are there any other changes I want to make? And then I let July, August, September come. I'm at the 1st of October and I'm going, I'm 80 some odd days away from December. Last look. So with each month, I get creation and I get 3 more looks at it to go, do I want to change anything? And go, then that's the plan. It's a very short exercise that occurs every month with multiple months that you're doing it. And the budget is a continually 12 months in advance. You don't wait till December and write, here's the next year's. And you just continually look at it. Once you get into the habit of doing this, this is an extremely easy exercise to do. And you find that you are looking at business very differently. This is like, am I driving this vehicle by looking out the front? Or am I driving it by looking at the rearview mirror? Because if I only look at my financial statements that have happened, it's like running my business by looking at the rearview mirror. Here's what's happened, so I hope what's ahead looks a whole lot like it. Oh crap, I didn't see that tree. That's a budget. That's what a budget does for our business. It tells me what's to happen. I will have in front of me at all times a 1 year, a 12-month profit and loss statement of what I expect is going to happen in my business, and that version of the P&L that I showed on the screen a while ago, that's where those numbers are. They show up there and I go, that's what I thought was going to happen, and this is what really happened, and the last column is variance. How much of a difference am I? What is this teaching me that I'm doing differently in my business? Better that I need to do more of, worse that I need to stop doing, whatever the situation may be. Instead of someone's telling you, I'm expecting a good year next year, we don't use words that are adjectives like good, better. We use words that have numbers to them. I expect dollar amount increase in profits. I expect dollar amount increase in sales. I expect percentage amount increase in margins. I expect expenses that are down this percentage. Not just, oh, I hope I make more. I'm in control of where I'm going, and I am watching it. So, we put this thing together. We put this budget together. And now we're back to that thing about, oh, cash on hand and profit. We find they're not related to each other. So that budget has said profit. This is what I expect each and every one of the next 12 months for profit. But will there be the cash on hand to make it happen? So there's an expression we used in our business, and I have it written and appears across the top of the monitor of my computer in my office. It says something to the effect of, making a profit may give you a thrill, but it's the cash flow that's paying the bills. Making a profit may give you a thrill, but it's the cash flow that's paying the bills. Because when you show up and say, I'm making money, and you're behind on bills, well, but I'm making money, I'm getting there. Surely next month will be better. Well, why would I expect it to be better? Because you don't know what's going on in the business. You don't understand the difference between the two. So you create this thing called a cash flow plan. All right, so we don't get to talk about it today, but here's the invitation. Go up to my website. I have no problem referring you to my website. Why? Because, one, there's no cookies on it. So you know how everybody's website today has a little thing about it, like please be advised. Okay, that's not on mine. Why? Because I don't have any of that crap. I just have a website that just lives there. You can't buy anything on my website. Everything on the website is free. All the articles, everything out there, it's just free. Help yourself to it. There is a class that I teach on how do you do cash flow. I do it with an Excel chart. And there's a 25-page PDF There is a PowerPoint. There's a 90-minute audio session there. And it's me speaking to some group and saying, okay, here with an Excel chart, here is how we build a cash flow plan. And it's just Excel. Oh, surely everybody's got Excel. If you're a Mac user, you've got some version of it, or you can put Excel on it. And with Excel, how do you put it together? And it will always tell you, here's what's going to happen in your business. So we can't talk about it today for time constraints, but you could go up to my website and watch it and listen to it. And then on top of it, to make it even easier, I have 2 Excel templates. One for people who do cash-based accounting, one who do accrual-based accounting. That's a discussion for another day. You can download my Excel charts, which already have numbers in them, change the numbers to your numbers, and there you got a working chart right there. Just go to it. If you don't have it at this time next year, I gotta say, it's totally your responsibility to take up on the opportunity. Or are you gonna sit there and let the accountant kind of go, hey, is this looking okay? Or, oh crap, I didn't see that happening. And when you use this tool and you have it, okay, then here's another question. I gotta say, how long have you had that accountant? I mean, you've never heard of a cash flow chart? You would know today how much money is in your checking account on November 30th of next year. You would know today how much inventory you would have on November 30th of next year. You would know how much cash and how much inventory you would have for each and every one of the next 12 months. Why would you not want to know this stuff? It lets you sleep at night a whole lot better. It lets you see every problem before it happens. Anybody other than me ever walked in your business at one day and looked at stuff and going, oh, I really wish I hadn't bought so much of that. Checking account looks a little tight. Oh, if I had just bought less of this. Or on the other hand, if I had known I was going to be sitting on cash this well, I would have gambled and tried this. I would have gambled and tried that. But I didn't know it was going to go that well. It's like reading a book. Some people take a book and read the last chapter first so they know how the story's coming out. Okay, having a cash flow chart is like going to the last of your book for your business, your financial statements, and it says, and they lived happily ever after and made a crap load of money because you get to plan it. That's what a cash flow plan is. It is the absolute must-have #1 tool for a business. Cash on hand, you add to it how much money did you make, you add your cost of goods sold to it, you subtract your purchases, you take out the principal payments, you take care of your receivables, and it says here's how much money will be on hand at the end of the month, which is also how much money you will have on hand at the first of the next month, and it just loops together 12 times. I mean, that's kind of in a real nutshell, trying to slam it on one slide, but that's how cash flow works. Number 11, you might not be the right legal entity for your business. So, talking this morning with people, and I said, you know, I started this out as a hobby. I mean, this is not just one person, this is like everybody. Started out as a hobby, and it kind of grew, and now it's been like a real business. Great. What was your legal business entity when you started? What's it today? You might have outgrown what you were. Hey, this is just like me and my wife and we're a partnership. Okay, you probably have outgrown that as a business entity, and you're probably in an entity like that, you're setting yourself up that if someone sues your business, okay, they're not suing your business, they're suing you, and they can legally do so. Or if you're a corporation, because there are 6 here in the United States, there's 6. For example, in the United States, if you're a C corporation, you make money as a business and you pay taxes on that money. And now you've got money sitting in the business and you go, hey, I'm taking a paycheck, but I want some of that money for me. Pay some of the niceties of life. So you take that money out of the business and put it in your personal checking account, and you know what happens? It gets taxed again. If you're an S corporation, okay, or actually technically you're still a C Corp, you've taken the S option. Your corporation is taxed at your personal rate, but it's taxed one time, not twice. The money slides through. But the neat thing is, it's still a corporation. So if something happens and someone sues your business, they sue the business. And they go, well, I'm going to sue you. No, you can't, see, because I'm a stockholder. And you can't sue a stockholder of a business. You can sue the business, but you can't sue the stockholder. It's just like if someone sues Coca-Cola and you own Coca-Cola stock. They can't come sue you, okay? That's how the difference in the C Corp and the S Corp. All right, well, let me suggest a book. Let me invite you to go online, look up a guy. He's in Cincinnati. He's a CPA, and his website is Cincy, C-I-N-C-Y, taxcoach.com. His name is Mike McCormick, and he wrote a little book. It's like $25. It's called Entrepreneur's Guide to a Small Business Entity Ownership, something to that effect. Kind of a gold cover book. Okay? I would tell you, talk to him. I would tell you he's got it on Amazon. But considering I hope we all hate Amazon equally, why would you go buy a book at Amazon when you hate Amazon people who shop there instead of coming to you, right? I just always find the oddity. It's like, okay, I can go buy other stuff at Amazon, but I hate when people go buy my stuff on Amazon. I go, well, who are you screwing just because you just got screwed? That doesn't make sense to me. So don't go buy the book on Amazon, but just look him up. Cincy Tax Coach. The guy's name is Mike McCormick. And if nothing else, just call him. Call his office. And he'll say, okay, so where'd you hear Shay? Because I am like a big proponent of his book. Oh, heard him at the PRI show in Indianapolis. So you want to buy the book? Yeah, $25. You ought to look at that. If nothing else, you ought to spend the $25 and about the 2 hours to read the book and go look at what your entity is and going, maybe I've outgrown it. Maybe this is wrong. Maybe I've made money in other things personally in life and I don't want to have my personal wealth exposed for something that happens over here on this side. But you ought to do it as compared to saying, let the accountant and the lawyer take care of this for me. You ought to participate. Oh, there's the title. See? Where'd I put it? The Entrepreneur's Guide to Forming a Business Entity by Mike McCormick. All right. Number 12. When you borrow money, does the accountant tell you that they need to take and read the documents before? So when you borrow money, it's 30 to 50 pages. The first 2 pages can't tell you the story, and you sign them. But then all the other pages, you just initial them. Okay, all those other 30 to 50 pages on there, those are called the covenants. This is what your current ratio will be. This is what your debt to equity ratio will be. This number or better. This is how often you will have financial statements. Yes, you will use an accountant. Yes, you will give us these financial statements on a certain regular basis, and we're going to review it. And if you get out of compliance with the loan, then things happen. Like, you remember that 8% interest rate? Okay, it just went to 12%. Hey, you know that note that we're going to roll over at the end of the year? We're not rolling it over. Or we're calling in the note, and that's our right to do it. Okay, so here's your 30-day notice. If we loaned you $100,000, we want the balance of the $100,000 you owe us. Well, I don't have it. It's all in inventory. Okay, so here's your option. Go find money someplace else, or B, we take the business. It can be that kind of drastic. They can do that? Yeah, what do you think's in all those pages that you signed off on? That type of stuff in there. And you go, wait a minute, surely the accountant has read all this stuff? Let me tell you why you don't, and it's not, I'm not picking on accountants, it's just anything to do with numbers. I had a person that was borrowing $3 million from a bank for a business startup. And I got a call from the bank and said, we want you to review the business plan and all the financial documents with it and tell us what you think about it. And when I'm done with my rather dry and sarcastic sense of humor, I said, well, I'd like to know, can I borrow $3 million also? And with the same terms and the same arrangement. Why? And I said, I just want the money. I go, why that? And I said, well, because, see, I read all of the stuff that he wrote and all the stuff that you wrote, and there's just one little oddity. There's no repayment plan anywhere. You simply loaned him $3 million. Nothing in any document that either of you have created has any repayment of the $3 million. I'd like to borrow money like that too. You know, it's kind of like you can collect it the day after I die. You know? I just think you ought to be in charge of it. 13, you depreciate or amortize something. This is how we are writing things off. So when you buy a vehicle, or let's do this. When you lease a vehicle, the whole lease payment every month is an expense. When you buy a vehicle, you are getting to claim the interest as an expense, but you don't get to claim the principal. What tax code allows is that as you make your payments, paying down the thing, you get to take depreciation. What the item is worth, and over a period of years, they take depreciation, and it makes it worth less because it's kind of supposed to kind of wear out. Even with a building, even though the building may turn around and become worth more money, depreciation is a non-cash expense. It's a way to get you to buy stuff. Okay, that's the way the government's got to incentivize people to get them to buy stuff. So, do you participate with the accountant as to how fast the depreciation is done? No, my accountant takes care of that. That's kind of dumb. See, and it's not a whole lot to it. So let's take a vehicle and let's depreciate it over 7 years. This is all the conversation needs to be. Client, we're going to depreciate this new truck over 7 years. I want you to look ahead, a little forecasting. Do you think as we go from this year over the next 7 years, do you think you're going to make more money over the next 7 years? Do you think you're going to make the same kind of money over the next 7 years? Or do you think you're going to make less money? It's that simple, and you should have an answer. All right, so if I go, no, I think business is growing and I'm going to make more money over as it goes. Ooh, well, if I'm making more money, that means more taxes. Let's do the depreciation this way. Let's take a little bit of depreciation now, and as we go along, let's take bigger and bigger amounts of depreciation, because when I got bigger amounts of depreciation against bigger amounts of profit, I got a better chance I'm going to keep myself in a lower tax bracket. We ought to talk about that. Not just, none of this, the accountant. No, I took care of it, you're good. No, I'm not good. I want to participate in this, and I should, because you need that information from me. Number 14, your accountant is not all-knowing, all-seeing. The accountant does not make the final decision on anything. The IRS does. What the accountant has to do, though, is the accountant is signing documents. And the accountant has worked very hard to earn their credentials. And if they knowingly sign off on your taxes, knowing that you have cheated, lied, and done all kinds of stuff, okay, they're in trouble too. They're in deep trouble. So, they've got their credentials stand on the line here. So that being said, they do have an interest in paying attention. But you got to ask and say, what's your thoughts about it? How do you see it? How do you see what I can do? So when that book came out, 50 Shades of Gray, I thought it was an accounting book. Apparently not. And when the movie came out called The Accountant, I thought, God, who wants to go watch that? Like, what's the person sitting behind their desk just pushing a pencil all day long? Okay, apparently they do have other sides. All right, so quick question. You've got kids. You travel, you take vacations, but you go look at other people in the trade. You like fountain pens. What has that got to do with your tax return? Number one, as I understand it, there's a couple states, Connecticut I was told is one of them, that you have children. You can employ your children to work in your business. Child labor laws do not apply to your own children. Why give a child an allowance? Okay, when I was 8 years old, I was putting together bicycles in my grandfather's general store. There was no allowance, and I swept floors, and I did all kinds of stuff. And it's like, no, I don't get an allowance, but you can work. And I had my first full-time job at the end of the 3rd grade working in my father's store. And, hey, you want more money? Work more hours. Okay, that's an expense. And I wasn't the one who did this, but I did see the person who told me about their kid, And the kid at one point looks at their paycheck and says, Dad, I just got one question. Who is this guy FICA, and why is he getting part of my paycheck? All right? You take vacations, you travel, you look at other business. Is that a tax return? A tax deduction? I am studying other people's businesses. A friend of mine comes to Florida, says, hey, I want to have breakfast with you one day. Great, we're visiting. He gets out of his car, I get out of mine, I walk up and said, okay, let's talk business. I said, how's business? Great. Everything okay? Great. Anything you want to talk about? Great. Any other questions? Nope. I said, fine, we're through. Write it off as an expense if your accountant's okay with it. Why? Because we just had a consultation. I said, by the way, what are you doing tomorrow? He says, I'm going to Disney World. I said, you know what? I have some of my best ideas at Disney. You should take me along with you, and you can pay. But you are going to pay for breakfast this morning, because why? Because you just got a consultation. But you talk to your accountant, can you not write off this trip coming to Florida? I said, because maybe I don't travel during the month of December, and you had to come see me to get advice for your business. Ask the accountant, can you pull that stunt? The pins. Go to SEMA show. Walk into the mall at SEMA. There's a store that's got pins in it at Fashion Square. And the pins in the front window, next to its little sign says, financing available. It's a pin. I have no idea what it's sold for. But if I use that pen to write checks in my business, is that pen an expense? The accountant says no. And I will say, tell me where in the IRS code it tells me I can't pay $500 to buy a pen. Tell me where. Then why won't you sign up? Well, it's exorbitant. I go, well, let's define exorbitant. I did not buy the $5,000 pen. I see this as a compromise. You should be able to have a discussion with the accountant. Can I claim this? Okay, I mean, I know a guy in the floor covering business. When he goes out and does quotations, he drives a Maserati. Okay, that's his quote mobile. It's an expense. I want to discuss that with the accountant. Quick in closing up, there's an article on my website I wrote. It's called We're Not Playing on the Same Team. It's a guide to picking a new accountant. And it's asking questions. Some of them were kind of comical. Some of them were serious, like the comical ones. Ask the accountant, how much is 2 plus 2? What's the answer? The accountant should say, how much do you want it to be? I don't want the accountant that thinks this is it and they're set and dry. I want to talk. Hence, the one that fired me. You can't have a challenge with them. Closing points, I hope I've enlightened you. I'm hoping to give some ideas. I tried not to pick so much on accountants. Understand the problem with the relationship starts with us. You are enlightened. You know you can make a difference in how you work with the accountant. It's your job to go home and make a difference in the way the relationship is going to work so that you pay the least amount of taxes and delay them for as many years as possible. If I'm going to send you your postcard, just make sure you addressed it on the backside to me. And my closing thought is I borrow it from the movie Casablanca and Humphrey Bogart. Louis, I think this is the beginning of a beautiful friendship, and I hope between you and your accountant the same is true. Thanks for coming this morning.